Hello there, my friends. Chris Marcus here with you for the StockPulse Network and another episode of Inside the Markets. And today, really excited to have a guest. I've been following his work for a while. I think he's doing some stuff that, given what's happening with the currencies and the economy, could well play out to be quite important in this future going forward. So really fortunate to have Reggie Middleton, the founder of Veritaseum, join us on the show today. Tell us a little bit about Veritaseum, some of the applications. And I know he's been traveling a lot, but great to have you here today, my friend. How is everything going with you?
Things going well. Been busy, and I guess busy is a good thing. It's getting busy is a bad thing, right?
Yeah, well, I know you're working on a lot of interesting and exciting projects. And for the folks who may not have heard of Veritaseum yet, perhaps we could start just giving a quick rundown of what it is, what some of the things you're aiming at, and then we can dig in a little further from there.
Veritaseum is a software platform named from the Latin root truth, veritas, or veritas, and em, which is a suffix that I made up, an element, so the element of truth. This software platform runs on the Ethereum blockchain. For now, it's blockchain agnostic, but it runs on public blockchains, and that's very important. The public portion of public blockchains is part of what gives Veritaseum its power, and more on that later. And what it does is enables peer-to-peer capital markets. Your traditional capital markets are a hub and spoke model, or concentric circles. You have the big guy in the middle, usually a central bank. Right. In the US, the central bank is a private corporation owned by private shareholders, very different from most other central banks. And then you have money center banks surrounding it. So the Federal Reserve, surrounded by JP Morgan, Citibank, Morgan Stanley, Bank of America, Wells Fargo, et cetera. Around them, you'd have exchanges, and you'd have national banks. And around the national bank circle, you would have regional banks, savings and loans, credit unions, et cetera. And then you have mom and pop investors. And in between those sandwiches, you have large institutional investors and players, such as hedge funds, family offices, private equity funds, et cetera. And so every time you pierce one of those concentric circles, someone has a hand out, okay? So to get to the middle, right, and come back, which is one round trip of $1, let's say, you have given out significant portions of that dollar. So by the time you get it back from an economic value perspective, you paid a lot in fees. So instead of having to go through many concentric circles, we have a peer-to-peer capital markets. That diagram will look very different. A bunch of dots everywhere. Each dot represents you, a node, or somebody else, or a company, or a fund, or grandma, or a nephew. And each dot can deal directly with the other dot. So you draw a line connecting each and every single dot, and you have a web, peer-to-peer capital markets. One is very inefficient. You know, you break one of those big circles and everything falls. In the peer-to-peer capital markets, you have to break the majority of those circles or those dots. And even so, the minority of the dots are still there to continue on. So peer-to-peer capital markets are more robust, significantly cheaper, much more transparent, okay? And the future is actually the present, if you consider Veritaseum an ongoing concern, which it is. We're up and running now.
Yeah, and that's really what drew my attention to Veritaseum initially, because again, studying the Federal Reserve and the fractional reserve banking system, I'm sure some people remember John Corzine and a lot of rehypothecation. And I actually found it interesting, in one of your interviews, you were mentioning very few people buy stocks. They buy derivatives, but don't realize it. And even having worked on a trading floor, I continue to be stunned at how, we think maybe there's 10 shares when there's a lot more than 10 shares out there, which is what I think could really be a great application of what you're doing. If you could speak a little bit to that and just put into perspective some of the things that are going on in these markets that generally the average people don't know about, yet you're targeting with Veritaseum as a solution.
Well, what Veritaseum enables, for the most part, outside of the peer-to-peer capital markets mantra, is ownership, is possession. So when you buy something or you sell something, it has to be yours to buy or sell. So you have this token, it could be a Bitcoin or Ethereum. It could be a token of gold, which we actually sell, or silver or palladium, which we also sell, equity in the company, real estate, etc. You have to own it. And when you sell it, you pledge it, you put it to a smart contract, and a smart contract owns that asset. Okay.
Right.
And you still have to own it. When someone buys it, they're buying that asset. Now you can sell a derivative on that asset, but you have to make it clear because, or you don't have to make it clear, but that asset path and everything that goes into it is seen on the blockchain. Okay. Now you don't see what goes into it when you make it, but once you sell it, you get to see each and every path of the asset, and not just the regulator, not just the party that made it, but everybody who has access to a blockchain explorer, i.e., everybody who has internet access and can type something to a browser. So that creates a very transparent playing field, number one. Number two is very difficult to default because when you go through a transaction, those transactions either peer-to-peer, straight, or through a smart contract, which allows you to create conditions on a sale. For instance, I will sell you 100 ounces of gold if you give me 100 ounces of gold, $12,000.
Right.
Okay. No, it's $120,000. And if you have to give me $120,000 within 2 hours of this conversation, okay, plus or minus 50 basis points. Okay, we put that into a smart contract. Now that smart contract, assuming everybody puts their escrow, their assets into the contract and escrow it, is unbreakable.
Right.
Okay, which means if I change my mind, it doesn't really matter because I already put the gold into the contract. If you change your mind, it doesn't really matter because you already put your purchase capital into the contract. The contract is computer code. So it works as long as 1 + 1 = 2 and 2 + 2 = 4. So these unbreachable agreements put conditions upon a regular transfer, but these conditions are what people have been used to for the last several thousand years. Contracts, legal agreements, or social agreements. This is phenomenal, particularly since you can't breach them or break them, because now you could do business with anywhere, with anybody, anywhere, without having a balance sheet or credit rating or sue them, etc. That's where the vast majority of cost comes from in due diligence, and that's how most people get ripped off because they don't know who they're dealing with. We sell digital gold, right, as a store of value, and the reason why we came up with it was because we have a analysis and research arm, and we found the best ICOs we can find from an application and an entity perspective. But despite the fact that they were executing more or less as per the white paper and on schedule, their token prices were demolished by correlation with Ethereum and Bitcoin. The issue is their business models have nothing to do with price movement in Ethereum and Bitcoin. So I said, well, one way to do this is to create a store of value that can run through the Ethereum blockchain, take use of smart contracts and the network effect of having so many users on the public network, but won't be tied to price movement of things that have nothing to do with it. So
Right.
we created these gold-backed tokens, which are fully redeemable. They're 99.99% pure fine gold, and they're redeemable upon demand, which is AML KYC. And so basically it's just ownership of gold, but the gold passes through the blockchain. So why gold? It's not because I'm a gold bug. I know there's a lot in the internet environment, but that's not me. Gold is relatively stable against fiat for the short term.
Right.
And not just USD, but all fiat. Over the long term, it's also stable and hard. So the gold fluctuates relatively little in price, but fiat usually goes down. And the reason is because almost all central bankers manage their economy by inflating their currency. So whenever economic output starts to slow, they print currency to create more liquidity and available dollars, yen, pounds, euro, renminbi, etc. And that's how they manage the economy. Whether it's good or bad, that's for a different conversation. Never seems to have worked yet, but that's never stopped anybody. But that causes the price of gold and those currencies to go up. And so when you have something that's relatively predictable over time, it makes a very, very stable store of value, which is why we created these tokens. And The tokens will be the denominating store of value. I don't want to call it a currency. In our applications from this point forward, once we get it going, actually about a month from now. And you can always redeem it for the currency of your choice. Actually, you can only redeem it for US dollars from us, but you can sell it once you have it. You can only redeem it for gold from us, I'm sorry, but you can always sell it for whatever currency you want by selling it to go buy it from. Okay, redemption, we get the actual gold. We also have an option where we buy the gold back from you as well. Now, this stable token is able to run through contracts. And so now you can use this stable token not just as a store of value or the transfer of value, but you can use it to negotiate deals. We're creating a hard money contract for a real estate developer and a small real estate developer, and he will use the gold tokens to take out a loan, right, at a set interest rate with set terms to be paid back at a certain amount of time. And he will use it to finance the purchase of a property and potentially rehab of the property, and then return the value back to those who lent it out to him plus an interest rate. Okay, these gold token holders who lent it out to him will have an investment, a loan, okay, with a higher than normal interest rate because gold is actually not a yielding commodity. It's a decaying commodity, a decaying asset. You have gold, you set it in your vault, assuming you have a lot of gold and you have some common sense, you have it insured, you may have to have security. These costs eat against the value of gold over time. We're creating a yielding asset, okay, that gives you a yield multiples, many multiples of that of the decaying asset. So this is a win-win situation for everybody. Now, a lot of companies, or a few companies, and some notable ones, are creating stable token. We consider the VE Gold token a stable token. But a lot of people think that stable token means a fiat-based token. Not necessarily. Most of the volatility actually comes from fiat. One of our African employees said quite simply, why would anybody consider a US dollar-based token stable? Because from the shilling's perspective, the Ugandan or the Kenyan shilling, the dollar is extremely volatile and hard to hold. When it shoots up in value, it drives us down, and then when it falls in value, our current administration has actually weaponized the dollar, right, to drive the price of the dollar up in order to put consequences on those who borrowed heavily in US dollars and have not agreed with US policy. This is my personal opinion. Of course, math and arithmetic tends to agree with my opinion, but we'll leave it at that.
I'm on board too, for what that's worth. And
okay, so when you have a currency, particularly a reserve currency, which has a lot of power, that is used in foreign policy and political machinations, then you have a currency that is not strictly macroeconomic in nature and intent. And that's when you have danger and unpredictability. Hence, the observation from Africa that the US dollar is about as unstable as it gets. Okay. Over time, I guess it is very stable, but stable because you can predict its fall. Again, the Federal Reserve manages its economy by printing money and soaking money out of the system as well. But if you look over time, it puts much more money into the system than it takes out because it has to keep the facade of continuous growth. Now, the US is a very powerful country and it does grow a lot, but it grows in fits and starts. And so when the fits come, the printing goes. The start comes, they pull back a little, print. And the fit comes and they print more. But over time, the money supply increases significantly, which is why you have, I think a lot of charts have a 95 or 93% drop in the value of the dollar. Now, that's not the whole story. To defend them a little bit, you have to factor in the efficiencies borne by technology, et cetera, because a dollar may buy less, but also it takes a lot less to produce X amount of output. But even after you put all that together, there's no way in the world that you can say that the dollar has truly held value. One way of looking at it is valuing a loaf of bread, or loaves of bread. 1,000 years ago, okay, a gram of gold was able to buy several loaves of bread, okay? A gram of gold right now is about $39-ish, which is enough to buy. In New York, where bread's overpriced like everything else, it's enough to buy roughly 5 loaves of bread, okay? 100 years ago, a nickel was able to buy a loaf of bread, and a dollar was able to buy several loaves of bread. Right now, a dollar buys in New York City roughly a quarter loaf of bread. So just using something that inflates over time, like currency, such as foodstuffs, and you can see where despite efficiencies, the dollar has lost value over time, where the gold has not lost value over a much longer period of time. Okay, and foodstuffs inflate just like currencies do. And gold inflates as well. It has about a 1.5 to 2% inflation rate because it's continuously coming out of the ground. Some of it is lost and destroyed, but most of it isn't. So, but it's a predictable inflation rate with gold. It's unpredictable with fiat currencies. And using the bread example, one would think that technology and the increase in technology over the last 100 years, 1,000 years will cause deflation because it's now much more efficient in the production of bread and it should cost more over time. I'm sorry, it should cost less over time. But despite the increasing efficiency, bread still costs more and more. So that actually destroys the efficiency, technological efficiency argument with consumable foodstuffs. It doesn't with technology though, because technology is actually getting cheaper and cheaper over time. Okay.
Yeah, it's incredible how the Federal Reserve has a history of confusing efficiency with deflation, which perhaps we won't go too far into today. But I appreciate that you point out how the piece of gold or silver is just, it's still going to be a piece of gold or silver 10 or 100 years from now. But what's really happening is that it's the value of the currencies that are fluctuating. And certainly we do focus a lot on gold and silver on the show, and I'm glad you brought that up. Because one of the things, as you were mentioning the smart contract, I'm guessing you're familiar with the Deutsche Bank case, and some of the banks have been fined recently for what's called spoofing the markets, placing bids or offers and then withdrawing them. Would the smart contract effectively eliminate the ability to do that?
Well, you can do it by making a peer-to-peer transaction where if someone spoofs, they simply lose money. You put an offer out, the offer is taken without the ability to retract the offer. You change your mind. And the way to change your mind is let them keep the money without taking delivery of the product. That's an expensive way to change your mind. Best case scenario, you just take the product anyway. But it all depends on how the contract is written. Smart contract is like this background. It's a white blank sheet, and you write on it whatever you want, computer code, a meeting of the minds. If the minds meet with the intent of defrauding, there you have it. You have a contract that was designed to defraud. If they're meant for a true exchange of value with best efforts, then you have that and everything in between. So it's not necessarily a panacea, but it's a tool to do business that is more efficient than the tools in previous years.
Right. And along the lines, again, of gold and silver, where myself, a lot of others dig in how there's these massive amounts of paper contracts dumped on the market, which personally I believe is the reason why the price is a bit lower than it would be otherwise. Maybe if you could comment on, and again, if there's any confidentiality you can't go into, but to the degree that you can, I know you've mentioned in past interviews and again today about the gold and silver, and a lot of people wondering, when does this come to an end, this fractional reserve system? Is that something that in the long term Veritaseum can make an impact on in terms of replacing it with a more transparent and honest market that I think a lot of people out there are very much hoping for?
Well, I hate to burst your bubble, but there are too many players who don't want a totally transparent market because their profit margin is based on opacity. Let's suppose you advertise, you get paid for the show, and you like the money you get from the show. And I turn around and bring software that, pardon me, I turn around and I bring software that prevents you from broadcasting your show. You're not going to support my software, and you'll probably do everything you can to put me out of business. Now, there's nothing wrong with you broadcasting your show, but there are certain things wrong by stuffing profit margin via opacity. Personally, I believe we can stuff profit margin via performance, right, and delivery on what we promise. And in a nascent market, we can easily do that because our profits, and this is taking good or bad and throwing it out the window and just looking at actual facts. So there's no right or wrong. Our profits come from taking advantage of inefficiencies of the legacy players. So they simply charge too much. They charge 60% gross margin. We charge 15%, and we simply make it up on volume.
Right.
Okay, and it's easy to do that because we don't have a legacy business to protect at all. I can care less whose derivatives trading house goes bust. It's just, not my business.
Right.
So, in the beginning, in a technology shift, you always have the new players who increase efficiencies by throwing the inefficient guys down the waist too. Think about when Google first got started, Facebook with their advertising, Microsoft with their software for PCs versus the very expensive stuff beforehand. And the story goes on. Nobody uses typewriters anymore. Nobody reads the classified ads on a piece of paper. Very few people actually go to libraries anymore because of the internet.
Right, right. And one other thing I wanted to ask you about, obviously this will be a little bit more general to the crypto market, but we've seen a lot of volatility in the past year. And along with that, there are reports that there is manipulation in the crypto markets. Again, from my experience on Wall Street, I find it's harder to find a market that isn't manipulated than one that is. And certainly you have a really in-depth perspective on that. Anything that you can comment on for folks who are still new to cryptos and wondering what's happening, why we're having the volatility, and if it is an honest market, or perhaps any ways you might be getting involved in that?
Well, you corrected yourself, and I was about to jump in and correct you. It's not necessarily so much as manipulation in crypto markets. There's manipulation in markets. And so when you throw crypto in front of it, you're being biased. You're trying to single out a particular market, most likely out of ignorance, which is unlikely. I think the people who do it are doing it because they're attempting to put a bad label on crypto markets, but they're ignoring all the other market manipulation. I see a lot of reports. Ernst Young came out with reports saying most ICOs are out of business or have not gained in value or price. Price in an inefficient market is not telling of anything besides, what group is buying or what group is selling. Okay, it's value that counts, and over time, value will reign supreme. If you remember during the .com mantra bubble and then bust, the price of Amazon shot up and then collapsed down, $2 pennies. That doesn't make Amazon a scam. If you look at Amazon now, it is one of the most valuable companies in the world, and its CEO and founder is the richest man in the world, or one of them, not necessarily the, but different conversation. Okay, the reason is because he created value. He created value from day one. He created very high growth value, and a lot of traditional legacy investors couldn't understand it, so they said it was overvalued, and it's overvalued. And they said it every year for the last 15 some odd years, and now it's overvalued to the point where it's one of the most valuable companies in the world. What it is misunderstood. Every nascent market has a lot of volatility, like stock, like the .com market, like the dollar when it first came out, which was a continental note, which dropped 98% in value before it was recalled by the government on like 1 or 2 pennies out of the dollar. All nascent markets. Once those markets go through their boom and bust cycle, a lot of the riffraff is shaken out, then the real players are there. I like to count Veritaseum in that. You had the E&Y report said only 30 something or 13% of the companies, or 30% of the companies had an MVP or a working product. But that's a very, very selective study because they could have came and spoke to us. We have 6 fully fleshed out developed products, and they're out running in the wild. Where they're not running has nothing to do with our development. It's having regulatory ambiguity and opacity. Okay, and not only are the products running, most of them were invented by us. They don't exist anywhere else. So by definition, default, they're best of breed. Even if you expand it past just the crypto market, they're still best of breed. And they compete very, very well with all the legacy products that they could be compared to. But Ernst Young decides not to include Veritaseum. They don't call me. And so they say, the crypto market's bust, this, that, that. If you look at the failure rate of startups in general, the crypto market doesn't do that bad, particularly if you look at the failure rate of startups that either don't have access to capital or had access to capital without the requisite management to handle it. Look at the track record of sell-side analysts and their reporting of public equities. Sell-side analysts are regulated by the SEC. Okay, the public equities market is regulated by the SEC. Okay, the analysts are wrong the vast majority of the time, and they never give outright short sell recommendations on companies that they underwrite. Okay, a lot of people could consider that fraudulent. If you take a look at many companies that went public under the full regulation of the SEC, you see fraud everywhere. WorldCom, Enron, you see collapses with Bear Stearns, Lehman Brothers. And these are not hard to see. If you go back to my blog, I called Bear Stearns 6 months in advance, 32-page report, full detail, exactly as I said. Same thing with Enron, Countrywide, Washington Mutual, General Growth Properties. So how could a one guy with a very small team of analysts have so many accurate calls in a fully regulated market? So there's something wrong there. It's not about cryptos, right? It's about the system in general. And if you're going to say cryptos or fraudulent or scammy or volatile, that same logic and that same argument can be put right in the U.S. equities market under full purview of all the regulators. Now, I'm not saying the regulators are bad, okay? And I'm not saying that the U.S. markets are bad. What I'm saying is a market is a market. And if you're going to go and isolate one market to the detriment of the participants of that market, but not use the exact same rules and apply it to other markets, then you're being biased. You're not being accurate. And then you're being, by definition, manipulative.
Yeah, and I think that's what we've really been lacking and needing so much. Again, I left Wall Street primarily because I saw so much where, you know, if you want to have the market however you have it set up, but just let it be fair and everyone's playing by the same rules. So again, I really like the niche that you're targeting here. And perhaps the last question, especially for folks who are considering investing or just want to know more about the company, in terms of where we stand today and the goals that you have, what are the key hurdles or challenges that will really allow it to end up being successful in the way that you're hoping for and that you're aiming to overcome and figure out right now?
We need regulatory clarity, number one. But tying for that number one place is equanimity. We need equal access. So regulators can be very clear, but they can also heavily favor the incumbent players or the old boys club, basically, those who have a lot of capital and a lot of access. Okay, the capital in part was solved by the ICO phenomenon, but it was undisciplined with a lot of unwise players. Okay, and that I fully admit. But if you close the spigot off completely, or close it off to everybody except for the old boys network, the club, then you've recreated the problem that the entire ICO model solved, and that's access to capital. Okay, so I'm not gonna, let's forget actual regulatory jurisdictions. So we're not discussing the US or Asia or, you know, London, etc. But if you have a regulator that makes a set of rules that are very clear, written in black and white for everybody to see, so there's no ambiguity and there's no going back in time, you know, and retroactively saying you did this wrong, you did that wrong, which is not very fair. Very clear rules, right? Everybody can understand, you know, if you do this, it's good, if you do that, it's bad. And if you make sure that there are no barriers, right, to access, whether they're capital barriers or whether they're access barriers or whether they're barriers for execution, then you create a fertile playing ground. There was no regulation, or very light touch of no regulation during the internet era. Now, which country is by far the leader in internet technology and businesses? The US. Okay, and there is no close second. Okay, I don't see that happening in the blockchain. Okay, I don't. You have the Caribbean, Africa, Asia, and parts of Europe that run circles around this jurisdiction, the US, because there's more clarity and there's more equanimity. Hopefully that changes, but you know, we shall see. Number two, you need true education. In the beginning, a lot of these ICOs that weren't frauds, and a lot of them, there weren't as many frauds as everybody exclaims, because everybody, a lot of the, the armchair quarterbacks call Veritaseum a fraud, right? And they called us a fraud because they simply couldn't understand what we were doing. Didn't take the time to learn, didn't take the time to ask or watch a video. They just didn't understand it's a fraud. Okay, we're a business, we're a for-profit business, so we're not a foundation. Our business doesn't rely on getting a lot of people to trade our tokens. And, we're literally a software provider and an advisory and consultancy. Okay, but we do it for things financial. We have a very diverse and very broad management team. So legal, macroeconomic, global macroeconomic strategy, we have valuation, we have real estate, we have trading, we have derivatives, we have financial analysts, CPAs, CFAs. So with this broad, political advisors. So with this broad breadth of management and people who actually ran businesses, we had a much better chance of creating a business. Now you look 1 year, 1.5 years forward, and we're going full power, full steam ahead, where a lot of the other ICOs have fallen. And the reason they've fallen is because they didn't have diversity and depth in management. As a matter of fact, many of the ICOs that fall, if not most of them, they fell because they couldn't get the software developed, despite the fact they were created by software developers. And the reason is, creating a software company takes a lot more than a software developer. If you look at the biggest software companies, right, their biggest expense are not software developers. It's management, sales, marketing, basically the infrastructure that runs a business. And then you have the guys that create the product, the software developers. Software developers didn't do this, and to their credit, they didn't know it because their job is writing code, right, and engineering structures, not in running a business. Now, when you look at it from that perspective, you can see where a lot of the credit came from, because capital was given to software developers and not necessarily to business and entrepreneurs, or business leaders and entrepreneurs. That also happens in the VC world as well. You have venture capitalists who give money out, but to give money out for maximum return on investment, not necessarily maximum value creation. They're looking for an exit 2 to 5 years. Okay, we at Veritaseum are not looking for an exit at all. Okay, so this is do or die over here. So either we restructure the global social, economic, and geopolitical structure, or we don't. But we're not looking to sell out to Goldman Sachs. We're not looking for, a buyout, partial buyout in 3 years. We're going for the gusto. And we don't have to worry about what happens next quarter or next year or year after next. Right. I think we're between 1 to 5 years in advance. Okay, and because of that, and as long as I have capital to do it, I just stay on the straight and steady path. Okay, that type of investing is what true intergenerational, multi-generational wealth is made from. And it's not made from trading based upon the news that happens for the day or what happens at the end of the quarter. You cannot find these type of investors publicly because, they just don't abound. We make our money from maximum return on investment. They make their money from churn, getting people to change their mind. And look, today something happened, but today something else is happening. The problem with that is any true value does not change costs within a 24-hour period. If it did, that means it changed costs 2 or 3 years ago, and you weren't aware of it. And you ignored it for 730 days in a row.
Right. Yeah, a lot of great points you mentioned in there. In particular, find it interesting how you were pointing out that there's a lot of commentary about the cryptos, about Veritaseum, where often I hear the folks that are saying there's nothing there, or it's or out bashing it. Like you point out, not that there aren't valid arguments to raise, yet often I find the folks who are saying that, if you ask them to actually explain what's going on, they haven't taken that step to do the research, like you point out. So in closing, I know you have a great YouTube channel where you do videos and really provide some education for, and again, my background in the markets, where anytime a lot of people don't understand something, if you really get a handle on that and be clear on what's going on, and I think you do a great job of doing that. So you just let folks know where best to find you so they can stay updated and continue to learn and get involved if they'd like to do so as well.
Okay. Well, you can follow the website, Veritaseum.com. I'm on it. There are introductory videos, an introductory video, and there's the actual app, which is the VEDA, which stands for Veritaseum Autonomous Distributed Interactive Research. Research driven. We have four analysts on staff full time. They create research, and this application takes research, goes out, purchases assets, and allows you to replicate that portfolio. We have, and that's for the nothing there comment on the vaporware. We have by far, the deepest, most advanced blockchain-based application on a public network that I'm aware of. There are many, but I'm not aware of any that are as diverse, as deep, and as broad as ours. It's basically a software suite for P2P capital markets, like Microsoft Office. Anybody who has a doubt that is there, go to the website and try it out. That's all you have to do. Go to the website, click Beta, you're in, follow the directions. You can follow me on Twitter at Reggie Middleton personally. You can follow Veritaseum, which is at Veritaseum Inc., Veritaseum Inc. And you can also reach me on the various, or you can follow me on the various social media platforms such as LinkedIn, Facebook, etc. I'm not a big user of Veritaseum. Not Veritaseum. I'm a big user of Veritaseum. I'm not a big user of social media except to publish my thoughts and events and progresses. So don't expect me to respond, but you can follow us that way. If you go to Veritaseum.com and click the menu, upper right-hand corner, and you just go to VE team, and there's an entire team there, or at least the managers, not the whole team. And then you can contact us through your particular interest, whether it's technology, operations, finance, compliance, analytics, etc.
Well, I sure appreciate the information, the education you're sharing, and also really what you're going after with Veritaseum. Certainly based on everything I've seen, I think there's really a need for what you're providing. So with that said, we'll wrap up today, but thanks again for making some time to join us. I know you're traveling around the world because there are a lot of folks that are interested in what you're doing, and hopefully a few more will find out today. And I want to wish you the best of luck, and hope to have you on again soon and talk about Veritaseum again one day.
Okay, well, thank you. And it's good to be on. I appreciate it.
Thank you, my friend. We'll talk to you soon.
Okay, cheers.
All right, sir. Appreciate that very much. We'll get you a link over soon, and by all means, if there's anything I can do to help along the journey, let me know. It's really a pleasure to get to meet you and talk today, and I'm rooting for you and think what you're doing is great.
Okay, well, thank you.